Hello, everybody. We are having with us Dr. Seetharaman. How are you today, Dr. Seetharaman?
Very well, thank you.
Dr. Seetharaman, the latest global economic developments that we are seeing, like for instance, the possible US Fed tapering, we are seeing that this having a little impact to the financial markets as we see that they are moving a little bit. What is your view on this?
Well, now the geopolitical risk has been eased. The Syrian tension, which we had for the last 2 weeks, was a major driver for financial market volatility. US tampering was sensed since June 19th, but the conditions which are to be fulfilled before slowing down on the bond buying program need to be measured. Now, had there been a war, the commodity prices would have gone up, stock market would have been taken a nosedive. Now, temporary halt on the war, Syrian strike, it should have been having a positive reflection for the stock market to start with. Whether the bond buying program will slow down or not, it depends on many factors. I think it's, in my opinion, it's very premature to push the button. There are signs of improvement in US, but I think they should temper it down for a while and then measure all the indicators: unemployment, inflation, purchasing power parity, and again, a solid, sustainable growth of not less than 2.5%. Those are the norms which needs to be published. Otherwise, any premature reduction in the bond buying program will have again major financial market volatility. So I am confident they will not reduce the money supply at this point.
But we have seen also that the forex markets are moving. So what are the new trends on this sector?
We've seen dollar index is now 81.6. Again, similar reflection we have seen in the pound. Pound is now 1.57 against dollar. Again, when it comes to euro, 1.32. Japanese yen got weakened because Syrian tension is eased. Now it's 100.67. So those are the reflection. We are seeing the rest of the currencies like Japanese yen is weakening and dollar is strengthening, and with the changes which are likely to happen without war, again dollar will get strengthened, rest of the currencies will get weakened in the coming days.
And what about the precious metals? There is any movement there?
Now gold will come down. That's the indications we have seen. Per ounce now is 1367 per ounce as far as gold is concerned. Silver was skyrocketing from 1920 to 23. Now it's costing between 20 to 23. It will come down further. So in my opinion, the gold will go back to 1,300 if there is no imminent threat on Syrian strike. Then silver will also reach between 18 to 20. That's not far off. In the next 2 weeks' time, you'll find a downward trend of precious metals.
Going more to the region side, and specifically what is going on in Syria with these latest developments, how all this is having an impact to the oil and gas sector?
Oil and gas is going to come down. If there is a geopolitical tension, there are issues related to Suez, issues related to Strait of Hormuz, and again, clearly the region has been producing huge natural gas and oil. 45% of the world oil, 20-25% of the world gas comes from this region. OPEC plays a significant role of 45% of the world supply. Now, since Syrian strike has been deferred, halted in a way, now there will be reduction in the Brent as well as WTI. Now we have seen Brent has come down to 112 from 115. Similarly, we have seen a reflection in the WTI NewMax 107. So it will continue to go down. Perhaps if there is no strike, then it will go back to original level between 90 to 95 NewMax and 100 plus will be Brent.
So do you think that this instability is going to last for a long time?
I think so. See, the financial market volatility is a factor of how the world's largest economy is going to be stable and functional, and what sort of the money supply or quantitative easing altercations taking place. That will have reflection in the commodity market, stock market, bond market, and the currency market. Add to that was Syrian strike, which was speculated for the last 2 weeks. Now there is a temporary halt. We'll see what's the reflection in the financial market. It will be highly volatile again.
So how all these developments are having an impact to the GCC sovereign yields?
Sovereign yields, if you look at it now, it's softening. It is, for example, Saudi is, 69 basis points, and again, when it comes to Abu Dhabi, is 73. Now, Qatar was 87 last week. Now it's come down to 80 basis points. Dubai and Bahrain is also softening in real response to the crisis averted temporarily. So, in short, the credit default swap rates are softening in substance.
Thank you very much, Dr. Seetharaman.